What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. Today's video, we're going to be covering the Sofi stock, and I'm going to show you exactly how the Sofi management team over the past 3 to 4 years has been trying to decrease the risk of Sofi as an overall business as fast as possible. You've been reading the bear headlines for the past 2.5 years since Sofi has gone public. Student loan lender, personal loan lender, defaults, high risk, FICO scores. You hear that nonstop. But what you really don't hear is the diversification that SoFi truly has, because the company is built on 3 business segments, including lending, which is, the main focus of being a bank, financial services, and the third one is technology platform consisting of Galileo. And I'm going to show you guys how fast SoFi is truly trying to transition away from being a, heavy weighted personal loan, student loan lending based company. And if you truly look at, what's been happening the past 3 to 4 years, it is truly mind blowing, because SoFi is doing exactly what they, said they wanted to do, which was make all 3 business segments a third individually each. So 33%, 33%, and 33%, I believe, is what they're truly trying to accomplish. And if we look at what's been going on with the numbers, I mean, these are the numbers, guys. The ones I'm going to show you are going to be, right around 95 to 98% accurate. This is what we are going to be seeing that is going to be happening for SoFi going forward. And it looks like the management team is truly cashing in on what they said they were going to do. And that's once again why we are invested in SoFi, because the management team continues to deliver in a tough macro environment. Student loans have been nowhere to be found for over 3 years, which is what made up 95% of the company in the previous years when they were a private company. So things have truly changed fast under Anthony Noto, and I think they're going to continue to change for the better. So if you find any of this information useful, be sure to smash the like button. Let's try and get the video to 1,000 likes. Don't forget to drop a comment. I'm going to be commenting back to as many people as I can. And don't forget to subscribe to the channel. Let's try and get the channel past 15,000 subs. Let's get into it. All right, guys, now check this out. 2020 is when the company went public. I believe it was around Q2 2020 or Q3, where they were actually trading live on the market. And as you can see here, the company pulled off about $600 million in revenue. And this was with all 3 business segments. And of course, student loans finally getting canceled. That's when they switched over to personal loans. So you can still see here that lending produced about 536 million out of the 600 million revenue, which consisted of 85% of the overall percentage. Galileo 95, which is about 15%, and then financial services at 11 million was 1%. So this is where the articles were, absolutely insane. This is where the bear articles really came out with a high risk, lending, unprofitable SPAC stock. And as you can see here, the truth, really does tell in the numbers, 85% heavy weighted lending. But as we go into 2021, you can see the 3 business segments overall revenue grew to $1 billion, and you can see lending consisted of 763 million. So that dropped from 85% to 76% of the overall revenue. So a nice 9% pullback. Galileo jumped up to 19%, a 4% increase, and then financial services jumped up to 58 million, which is 5% of the overall revenue. So as you can see, the management team continued to move into the right direction. We move into 2022, the 3 business segments overall revenue $1.5 billion. Lending grew to 1.1 billion in revenue. This continued a nice pullback to 71% of the overall percentage of revenue. Galileo grew to 315 million. This is 20% of the overall revenue, and financial services continued to accelerate to $167 million, which was 10% of overall revenue. So you can see exactly what you want to see. SoFi continuing to diversify, growing Galileo, growing financial, continuing to grow lending, but just the overall percentage continuing to pull back for 3 straight years. You can see they went from 85 to 71. We still had a lot of bear articles about lending, especially with personal loans, because SoFi was really getting hot on the personal loans because, hey, student loans were nowhere to be found because, hey, they're still canceled. They were still paused. 2023, this is where we're at right now, guys. So remember that we only have half of our numbers inside of the year. So the last 2 quarters, I'm just doing projections, and these projections are very fair because I just basically went off of what they did last quarter. I put no growth at all. So this is just basically the exact same numbers for the Q3 and Q4, you can see the overall three business segments are expected to grow to 2.1 billion in revenue. Lending would be about 1.3 billion. This would be 61% of overall business segment revenue. Galileo would be at 350 million. This would bring us to 16% of overall revenue. And then financial services absolutely exploding, guys. I mean, look at that, growing to $390 million, passing up Galileo. This would be 18% of the overall business segment revenue. So you can see that diversification, it takes a while. It's very slow, but when you look at it, over the course of 3-4 years, you can see they're trying to drop from 85% to 61%. So yes, they are diversifying as fast as possible, guys. And remember, with student loans coming back, that actually brings the risk down even further for lending, because they'll be able to balance out personal loans versus student loans. Okay, they won't just be student loans 100% or personal loans 100% like they've been the last 2 years. This would make lending even more diversified. So guys, they are doing exactly what they're expecting. Remember, they said they want it to be a 33% split. So you're going to continue to see lending come down. It really depends on how Galileo performs. The faster Galileo performs, the more lending will continue to drop down as an overall business segment percentage. And now we're going to be looking at 2024, which of course, guys, this is just completely throwing out some projections. You can see right here, if we continue to see the same type of growth, we would see lending at about 50% of overall revenue, which is awesome. Galileo at 25%. If they, finally see the ramp from these, larger durable bank partners, we should see Galileo explode in 2024, and financial services is going to continue to do what it wants to do. 25%. So this would be the exact same percentage drop the next as the last 2 years. So it'll go from 70 to 60 to 50. And hey, guys, I mean, that's not the 33% split, but maybe they will get there in an additional 2 years. And, we have more potential business segments coming on in the next couple of years, like, just business credit, business lending, business accounts. That's going to be another business segment, bringing us up to 4. Maybe we go heavy into auto lending, insurance, so that will just bring on more diversification and less risk. So maybe, SoFi will be at, 6 business segments in the next 5 years overall. Okay. It's just a matter of time, but hey, we are not going to be a complete lending company. We're trying to drop from 85% down to potentially 50% next year. Remember, guys, I mean, we're literally 1 quarter away from Q3 ending. So this is literally 5 quarters away from getting these types of numbers. So this is what the SoFi management team has done for you. It's hard to see this until you really look at, the last couple of years of what's truly going on in the background. I know there's so many different types of ways to value a company, but hey, this is a very important way to value a company moving forward, seeing where the overall business is headed, as when you break down all 3 business segments. So guys, as of right now, 60, 16, and 18 is a lot better than an 85% overall in lending. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you guys. Q4 is the magical quarter that we've been waiting for potentially years, that you guys have been following the channel. SoFi says they're going to turn a profit, and I truly hope they turn a profit and never turn around again and just continue to grow profits. The fairy tale scenario, 4 quarters of profit in a row, and boom, by Q4 2024, we're going into the S&P 500. Okay, that is what we want to see. And maybe SoFi management team, Anthony Noto, they really turn it on after they turn this profit and continue to scale users. At potentially 800,000 to 1 million members in 2024, growing us to another magical number of 10 million users. Remember, this company went public via SPAC at a $6 billion valuation. We're trading right now at an $8 billion valuation. So that's 2.5 years. The company grew $2 billion in market cap. That is the volatility we've been getting because we've had 9 rate hikes in a row, or something around there, 8, 9, 10, and we potentially may have 1 or 2 more. It's been a crazy ride, but understand SoFi is doing what they need to do. In the background, as you can see, we are diversifying away from lending as fast as possible with Galileo and with financial services. So be sure to smash the like button. Let's try and get the video to 1,000 likes. Don't forget to drop a comment. I'll be commenting back to as many people as I can. What do you think about this information? Is SoFi doing what they need to do? And do you really see this company going to a 33% split across the 3 business segments in the next 2 years or so? Once again, my name is Kyle. Hope you have a great day.